In this video, I'm going to teach you a technique that you can use right now to simplify your TTM squeeze trading.
One of the things that I'm always trying to do is give myself an advantage, right? And going back through my notes, and it's interesting because, there was kind of a common theme on some of them. Align your strategy with market posture. And again, let's talk about daily, okay? Discussing market posture, we always look for our intermediate term posture first, right? Is the blue above the pink, which is the 8 exponential above the 34. A very easy way to determine your intermediate term trend is the blue stacked above the pink. They're only valuable when they are either trending up or trending down. When they start to go flat, they're no longer valuable. On market posture, we're going to dive into short term. Short term is critical. Now, I'm not discussing day trading, okay? So if you're short-term trading and you're day trading, different animal all by itself. I'm talking more about right this moment in this video on the daily time frame. When we're talking about short-term posture is the hardest one to get, right? We talk about highs and lows. And if you see here, these green boxes, they represent highs and lows. So you got to know how to determine what is a high. Now, we've already got a low, so the next progression is a high. So now look where we're at in the S&P 500, and we're about to fire. We're breaking resistance. Whenever we get anything other than higher highs and higher lows, it shifts to neutral. But because we're breaking high, I'm now neutral to bullish. And I will be full-blown bullish once we pull back and bounce.
And the reason why your short-term posture matters so much is the TTM squeeze is a short-term trading strategy. So what we're trying to do is match our short-term posture with when do we trade the squeeze and when do we not. Is that making sense?
If you're going to trade the daily time frame, and that's why I stress the word daily time frame, this stuff is the game changer. We always want to ask ourselves, what is the broad market doing? And then we trade based on what it's doing. For example, since the market is at resistance, we need to align our strategy with what the market's doing. So right now, when I look at this, I think to myself, okay, the market can break out and run for a couple days. Could break out 2 to 3 days, pull back. If it breaks out, we expect a couple more days of positive momentum, and then we pull back into a bull flag. Now, we have a better chance if we're trading, at least coincidence stocks or leading stocks in leading sectors. And again, remember, daily. We're digesting the daily time frame. This is the key to your trading. I'm aligning my strategy, and I'm focused. I'm narrowed in on what I trade. When the market is in an uptrend, the pullbacks, sometimes they might only be 1 to 2 days and then resume its trend, maybe form like an ascending or, a mini cup and handle, right? And then go. So when the market rolls over down here, that's when we go search for 5-dot squeezes. I'm going to look for 5-dot squeezes when the market pulls back to support. When the market is at support, like in the bigger time frame, that's when I'm going to look for these 5-dot squeezes. Because if the market bounces, we're going to win probably 70, 80 to 90% of those.
So remember, what we're doing is we're simplifying the way that we trade the squeeze. We're making it more effective. We're aligning what's happening with the market with when we trade the squeeze. Does that make sense?
So again, aligning the appropriate strategy with where the market is at. It's so important.
Okay, so here's the deal. You want to zone in and focus on trading those squeeze trades when the market is at support. If the market is at resistance and you go enter a bunch of squeeze trades and the market rolls over, which again, that's the higher probability. We expect markets to bounce from support to resistance. So if you enter that squeeze trade and the market's at resistance and the market rolls over, 60 to 70% of the stocks are going to roll over as well. That's when you're going to get faked out trading the squeeze. You're trying to simplify your TTM squeeze trading. And the best gift that I can give you is pay attention to where the market is at on the daily time frame. When the market is at support, the probability is it's going to bounce. That's when you look for your TTM squeeze trades. Go to the daily, find a nice uptrending stock, stacked moving averages, pulling back into a squeeze, and enter in the buy zone when you get that shift in momentum. If the market is at support, the probability of that trade working out is much higher than if the market was at resistance. Does that make sense? So let me ask you a question. If you focus on what I talked here today and you trade your squeeze trades when the market is at support only, do you think you can do better trading the TTM squeeze? If the answer is yes, we did our job in this video. If you'd like to learn more about trading options, I encourage you to check out my Options Elite Masterclass and all the bonuses that I'm giving away this month, like my TTM Squeeze course for free, plus that Forecast Pro indicator. I'm giving that away free this month to anybody who gets my Options Elite Masterclass. So check down below in the description if that interests you. Now, if you like the TTM Squeeze Pro indicator,